Call the meeting of the Finance Administration Committee to order. Roll call, please.
Steve Brunner will be absent. Rick Weinhofer.
Here.
Bill Jenks.
Here.
Dave Reeser.
Here.
And Keith Durr will be absent.
All righty.
We can leave.
So in council, anybody on council can be an alternate. Who would like to be the alternate? So we have a quorum.
Both be old.
We do have a.
You do have a-
You do have a quorum without an alternate.
Good.
There's 3 of you here.
3.
3 out of 5.
Told you, it's early. Okay.
Sure.
And this meeting is being recorded for public consumption. Are there any public comments? Seeing none, move on. I would like to jump to item number 7 so we don't keep Bill Lurch here. So we'll go on to presentation of pension plans. Bill.
Hey, thanks, Bill. Well, hi, everybody. I'm Bill Smith from Girard. I replaced Ron, who worked on your account forever, probably. And I've been here about 1.5 years. And I've been out here a couple times. So good to see everybody again. I stayed up and watched the baseball game, too. So if I say something that doesn't make any sense, raise your hand. Let me know what I said, and we'll try to correct. But we'll start on the very first page. It has a picture of our CIO on it. And there's a chart in the upper left-hand corner. And we'll talk a little bit about what happened, in the returns for the last year. I'll kind of go down the 1-year number and talk about the quarter as well. And just as a refresher, for some of you who might not pay as much attention to the markets as others, the first quarter was bad, right? Markets went down. Second quarter kind of got everything back. Third quarter, pretty good, right? And we'll talk about that as we go through the presentation. But, global equities in general for the year up 17.8%. I mean, think about the long-term historical return of the equity markets, probably like somewhere between 10 and 11%. So to get 17% over the last year, great. And that continues the streak we've been on, right? 2024 was great. 2023 was great. And what's really powered the stock market over the last couple years are basically 2 themes. One is cloud computing, right? Everyone moving their files to the cloud and storing things in the cloud. And the other is AI, right? The spending that's going on in AI, artificial intelligence, has been off the charts, right? They talk about these people, hyperscalers, right, that are spending all this money to build bigger and bigger AI models. And when you build bigger and bigger AI models, you need more chips. So, if you're connected to AI, cloud computing, chips, right, things have been great, right? There were 7 stocks really that have driven the market over the last couple of years. Microsoft, Apple, Alphabet, Tesla, NVIDIA, Amazon, Meta. Most of those are all related to those 2 big themes that I talked about earlier. U.S. equities did well over the year too, 17.4%. Would you look at large, mid, and small, the next 3 boxes, large 17.75. That's where those Magnificent 7 stocks would be. They're very large stocks. And it's kind of misleading, right? Because those 7 stocks have contributed so much to the return of the market over the last several years. Now, the other 493 companies really haven't done that great, right? It's been these big 7 that have really driven the market. So if you're an active stock picker and you don't own those 7 stocks and you don't own them in their weight at the benchmark, it's been hard to keep up, right? Mid-cap stocks, as an example, 11.11% for the year. That's not a bad return at all, but compared to the 17%, it looks kind of small, right? Small cap even harder, 10.6%. And you can look at the quarter, right, for small cap, up 12.3%. So the quarter return's bigger than the 12-month return. Let's let you know that the other 3 quarters, small cap hasn't done very well. And it's hard to be a small company, right? Interest rates have gone up a little bit. Small companies borrow money, right? If I'm Microsoft and I want to do something new, I can literally take $100 billion out of my checking account and I can buy your company to do that, right? Small companies can't do that. They have to borrow money. Tariffs have affected small companies as well, right? Most small companies do like one thing. So if my one thing is I buy t-shirts from China, Vietnam, you can pick a country, and I sell them in the United States, right, my cost of goods sold have gone up considerably, right? That eats into my profits. Bigger companies do more, right? They can kind of plan better. It's hard to be a small company in the current environment. International is kind of the big story. We'll see that on the next couple lines, up 17.13% for the year, 7% for the quarter. Emerging markets up 18.17%, 10.95 for the quarter. Going into 2025, we were all sitting here back in December of 2024, right? We would have thought, hey, new administration, tariffs, right? Strong dollar kind of agenda, all should have been bad for international, good for US. And we kind of got a reverse of that so far here in 2025. A couple things happened. Going into 2025, US equities were very richly priced, right? We use something called the price to earnings ratio to look at stocks. Price to earnings ratios in the US were very high. They were very low in the international world. Like Europe has literally kind of been a dumpster fire for the last several years, right? But they got a big fiscal stimulus package. ECB cut rates. Germany's fiscal stimulus package was really around military, a lot of military spending, something they haven't done in a long time. So a couple good breaks in Europe really drove stock prices up. And we caught a couple, speed bumps along the way here in 2024. And we'll talk a little, 2025, we'll talk a little bit about them as we go through the presentation. Global bonds up 3%. We don't really own a lot of global bonds. Some of the managers in your portfolio might have a little investment in global bonds, but we don't have a discrete allocation of global bonds. Taxable bonds up 2.88%, not bad, 2.3% for the quarter. And then munis we don't own, but munis did fine. Might be important to you for other reasons, but in the context of the pension fund, we don't own municipal bonds. So, interesting year, a lot going on. We'll talk a little bit more about it through the next couple pages. Any questions so far? All right, if not, we'll turn 2 pages. This performance table is all through 6/30. This hasn't been updated yet. We're just a couple business days out of the last quarter, so we're going to skip this. All right, so we're going to talk a little about the case for international stocks. So all of our clients, for the most part, are underweight international stocks. This is a 45-year period of time on this page. Domestic equities have outperformed international equities the majority of this 45 years. Anytime the orange line is above 0, that's US doing better than international. And this is a rolling 3-year period. So it's just the 3-year return for domestic minus the 3-year return for international. If you're above the line, domestic's doing better than international. Below the line, international doing better than domestic. This was a year where international has done just as well, if not better, than domestic. And if you look at the chart, when international does well is when the dollar is declining. And what we saw so far this year is about a 10% decline in the dollar versus a basket of other global currencies, right? So kind of a weak dollar has hurt, US returns and helped international returns. Any questions on that? On the next page, we'll talk a little bit about the tariffs. Companies will kind of build a plan around the tariffs. What Wall Street hates is uncertainty, right? So when the tariffs first got announced, kind of in the beginning of the second quarter, Liberation Day, you can see it on the chart, right? People weren't exactly sure what was going to happen. So immediately, stock market kind of sold off. Then tariffs got paused. They bounced back. There was a point where tariffs on China went from 20% to 50% to 100%, back to 50%, right? So what that does is it causes uncertainty, right? So if I'm a CFO of a company and I'm trying to calculate what my cost of goods sold are, I'm trying to figure out what my margin's going to be, I'm going to, thinking about how the tariffs affect the demand for my product, right? The more I know, the more I can plan and the more I can communicate to Wall Street. The less I know, right, the harder that job is. So as things became more evident and clear, right, you can see the orange line starts to trend up and it ends at 6:30. But if I draw this through 9:30, it continues to go up even more, right? So what Wall Street hates really is uncertainty, right? So, no matter what the policy is, if they can model it, right, they can figure it out. When you don't know what all the inputs are, it's harder to plan. Any questions about tariffs or anything? All right.
You think there's certainty on tariff?
I think it's no, because we're one court case away from it going away.
Yeah.
Right. But with that said, yeah, there's more certainty today than there was at the end of the first quarter, right? We had,
Okay.
right, exactly. Yeah. There was a point where we're going to have these meetings with all these countries and we're going to tell you what the results are, right? Some of those have happened. Some of those haven't happened. Some might never happen. But to your point, yeah, everything's relative. The other kind of theme has been the bond market, right? On the left-hand side of this page, right, the first column is spending, right? The second column is revenue. The difference is a $1.8 trillion budget deficit, right? This is our country's balance sheet, right? So just like your municipality has a balance sheet, just like my company has a balance sheet, right? The government has a balance sheet. Ours doesn't look great, and it hasn't looked great. And we get away with it because we're the world's kind of default currency, right? US Treasuries are kind of the default investment option. So we have kind of special power to borrow, right, that other countries can't do. It works up until the point where it doesn't work, right? If you look at net interest on the budget deficit, almost $1 trillion, about the same amount of money we spend on military, right? That's not necessarily a good thing. And why this is important in the context of your pension fund is, right, your balance sheet affects interest rates, right? So if people think our balance sheet is not up to par, right, they're going to demand more money when they buy treasuries from us, right? And kind of the fear is international people stop buying our treasuries, right? And that would drive interest rates even higher and have more adverse effects on the dollar. So right now, not a problem, but again, it's never a problem until it is a problem, all right? If we turn to the next page, we'll talk a little bit about foreign holdings of US securities. And if you look at the US equity market, which is the first bar, about 18% of the total equity market, or $16 trillion, is owned by foreigners. The orange box, which is labeled ROW, stands for rest of world, right? In the middle, you'll see treasuries, which is kind of the most important piece, right? 34% of total treasuries, $9 trillion, owned by foreigners. China and Japan and the EU are broken out. China used to be a gigantic owner of US treasuries, right? They would sell us products, we would send them dollars, they would take those dollars and buy treasuries, right? Over the last several years, China has made a concerted effort to buy other things besides treasuries, right? So they were kind of a natural buyer of treasuries. When that natural buyer goes away, other people have to pick up the slack. And if other people don't pick up the slack, the United States has to raise interest rates on their debt to entice people to come buy it, right? So we have about 40% of the assets in bonds. That's why it's important in the context of what we're doing here today. And on the right-hand side, US corporate credit, not as important, 28%, $4.5 trillion, but not as important as treasuries. Any questions about that? And treasuries are important because everything else is priced off treasuries, right? Your mortgage rate, banks don't make those up. It's based off a 10-year treasury, right? Corporate bonds, right? There's always a spread over treasuries. So treasury prices are important for everything that happens in the bond market. On the next page, we'll talk a little bit about inflation, which has been a continuing issue over the last several years. You know, the rate of inflation has come down. Prices are still going up. They're just not going up at the rates they once went up, right? So at the end of the quarter here, you can see that headline inflation, the total number, was 2.7%. Core inflation was 2.9%. You know, the Fed's target was a 2% rate of inflation. That has kind of changed. You can see the Fed cut rates at the last meeting. You know, the Fed has a dual mandate: price stability, job market stability, right? So they made a determination at the last meeting that, hey, the job market is starting to weaken. We're more concerned about the job market currently than we are about inflation. They cut rates. The expectation, and if you look into like bond futures and things like that, is that the Fed will cut rates 2 more times. We have 2 more meetings this year. They'll probably cut rates 25 basis points at each of the next 2 meetings. Any questions about inflation? All right. On the next page, just kind of to put in context of what we're doing here, we're managing a pension fund that basically has a timeline into infinity, right? 100 years from today, there'll be a people sitting around this table, just like us, talking about this pension fund, right? Police officers will be drawing pensions, right? So we have this enormous time frame. It's a lot different than investing our own money, right? Where we have, unfortunately, all have limited time frames. The point of this page is, and this is like 45 years of data, markets in general go up, right? Anytime the blue line is going up over 0, that's markets going up. But occasionally markets go down, right? We were reminded that of in 2022 when it went down a bunch, right? But these orange dots are the biggest drawdown during that year. So even years where the market went up, there's a period of time where the markets went down. So if you go to the very far right of the page, at the end of the second quarter, right, our stock market was up about 5%. Okay, that's fine. Halfway through the year, that's normal. But it had been down 17% at one point in time, right? So, we're going to talk more about the valuation cycles, the actuarial stuff in a second or two. But, you just had your 1/1/2025 actuarial study done. The next one doesn't get done until 1/1/2027. If we're going to have a period where the market's down 17%, hey, let's have it in the first quarter of this year. We got a year and a half, right, to recover till the next actuarial study. Think back to the previous actuarial study that was done on 1/1/2023, right? 2022 was awful. Stock market went down, bond market went down. Seemed to all go down more in that kind of end of that year, right? And then you had to have your actuarial study done on the first day of, right, 1/1/2023, which meant higher MMOs, lower funding rates, all those types of things, right? We just had 2 really positive years, right? 2023, 2024 were better. I'll talk about the results in a little bit. You guys did much better, right? Everyone did better, like you. So just, we all get caught up in the 24-hour news cycle. We have the luxury in the pension world here of being patient, right? Time is our friend. And on the next page is kind of a similar theme. The way we manage pension assets is kind of like the white box in the middle of this chart. What this chart is, we call this the periodic table of investment returns, kind of like if you ever took a chemistry class, the periodic table of elements. So every column is a year, right? Every row is asset classes ranked from best to worst. Every asset class has its own color. And what you should notice from this page is there's no clear pattern here. Just because you were first doesn't mean you get to be first again. Just because you were last doesn't mean you can't be first. Just because you're last, well, you can be last again, right? There's no clear patterns. So what we try to do is we invest in everything. We spread the risk around. We want to get as much return as we need to get, right? Most pension funds need to get somewhere between, 6 and 8%. But we want to do that without taking, an enormous amount of risk, right? Because you don't want to come out here and say, hey, guess what? We're down 40%. And, it wreaks havoc on your budgets and things like that, right? So we want to take the least amount of risk as we have to take to get you to your required rate of return. And this white box you end up in the middle of the page. At the end, you get almost all the return. You get lower risk. This is what we're trying to do. So any questions about any of the economy or the markets? If not, turn to the next page. We'll look at the police pension funds. For the quarter, up, and this is through 9/30. Through the quarter, up 4%. The benchmark was up 5.7%. Year to date, up 9.8. Benchmark up 14.2. For the 1 year, up 8.2. Benchmark up 12.3. So there's some big underperformance here on our part. Most of it can be explained by the lack of international we owned. International outperformed the US. We were underweight. As a decision for your pension fund over long periods of time, being underweight international was great. This year it's biting us, and we wish we owned more. Again, back to what I said, at the end of 2024, if you would have told me that international would have outperformed the US this year, I would have said, I don't know. I don't think so. We were wrong. Everyone was wrong. People got caught off guard. The good news is, if things do turn around, right? I don't think the dollar is going to be weak forever. I don't think the United States is going to lag Europe and Asia forever. This can kind of work itself out, but it is disappointing. Yes, sir.
Are there people that balance that portfolio to the international part instead of doing what we did?
Are there people who did it?
Yeah.
Sure.
Is it something you recommend, or would we just stay safe?
I think we stay where we are, and we ride it out. The last thing I want to do is go by what recently did well, just in time for it to reverse, right? If I thought there was like significant reasons for international to do better, I mean, when you look at our economy and you look at our stock market versus Europe or Asia even, right? We talked about those two big themes, cloud computing, AI, we seem to be a leader in that, right? If I go buy more Europe, what I'm buying is more banks, right? More auto companies. I'd rather own technology stocks than banks and auto companies over a long period of time. Now, in the short run, right, they're going to fluctuate. And valuation in the US is the one issue, right? Stocks are still pretty richly priced here. But if we're going to get 2 more rate cuts, and that just should drive those technology stocks up even higher, right? Discounting earnings, future earnings back at a lower rate, that should drive my price up. So I think we're fine, but that's open for debate too. If people have a good reason why, I'm always open to ideas. And I mean, at the end of the day, it's your money. You pay me to help you get to where you need to be. But
Well, your investment committee will dictate
yeah,
where to go and not to go.
yeah,
Right,
yeah. I don't really pick it, right?
right.
Yeah.
There's an investment committee that you have that
Yes.
looks at the ups and downs
Yes.
to your question.
Yes. Yeah. So Tim Chubb, our chief investment officer, there's about 5 or 6 people on the investment committee. I go to all the meetings. We talk about this kind of stuff we're talking about right now ad nauseum, right? We talk about the bond market like almost every day. And yeah, we think this is the best place to be.
Judgment.
Yeah. Question? No. All right. Anybody else? On the next page, you'll see your asset allocation. And just so you know what I'm talking about. So if you look on the upper left-hand corner, you'll see domestic equity was about 50% of the portfolio. International equity was 12% of the portfolio, right? That explains most of the delta. Now, with that said, we had 2 growth funds I'm going to talk about when we get to the funds part that underperformed, and we'll talk about those. So there are things we could have done better. Mostly underperformance is from this international underweight. But with that said, we have a couple funds that could have done better as well. So this is the police pension plans portfolio. On the next slide, you'll see the non-uniform, and the returns are very, very similar. And they're managed similarly, and it's all the same reasons for the underperformance. Any questions about that? Right?
Same for fire.
Fire, same as well. In the next couple slides, fire, same exact idea. All right. If no questions on returns, we'll go to the funds and thank you, Phyllis, on what they call page 1 of this FI 360 scorecard. And this is a service we subscribe to. These aren't my rankings or my firm's rankings, or this is a service. We'll go through the funds real quick. So in large blend, the JP Morgan fund and the Vanguard fund did well. In this chart, the first box with a color in it is short term. The second box is a rolling 3-year period. Green is good, yellow, kind of caution, red, concerning. The deeper color, the green, the better. The lower the number in the box, the better. So first 2 funds, green, green, no issues there. AB Large Cap Growth Fund, green, green, no worries there. Edgewood, red, red, right? That's concerning. So Edgewood only owns 22 stocks. They're all large cap growth stocks. We talked about the Magnificent Seven earlier. They didn't own all the Magnificent Seven. Of the names they did own, they didn't have a full weight to the benchmark. They were concerned about valuation, and they thought some of these stocks were, too richly priced. We've had decent dialogue with them. We asked them about it. We're keeping them for now, but they are on the watch list, and we are looking at alternatives. And, there's kind of two ways to get fired. The slow way is underperformance. The fast way is you do something you're not supposed to do, like buying value stocks if you're a large cap growth manager, or buying small stocks if you're a large cap growth manager, or buying a bunch of international when you're supposed to be domestic, right? These people are doing what they're supposed to do. They're doing it the same way they've always done it. It's just kind of working against them currently. So we'll give them a little bit of latitude, but at the same time, we're looking for alternatives. In the value camp, dividend income, right? Green. When NVIDIA is up like 100% plus every year, no one cares about the dividend income type funds. But this fund buys banks, utilities, insurance companies, people that pay 4 or 5% dividends every year. And they just kind of clip those dividends. It's kind of like the tortoise versus the hare, right? These people all end up in the same place over a long period of time. This is just kind of a less risky way to do it. And it balances some of that growth we have in the portfolio as well. Equity income fund, yellow in the short run, not really worried about it, still green in the long run. Thrivent, same way, mid cap, yellow, green. Baird on the watch list as well. We've had really good dialogue with Baird. Again, same idea, same people doing the same thing that they've always done. Kind of a big believer, people don't get like dumb overnight. They've always done it well. I think you're going to have another shot to do it well. With that said, there was a couple names in that mid-cap universe that they didn't own. Planeteer, which is an AI company that had unbelievable performance, and AppLovin, which was another technology company. They didn't own either one. Those two stocks account for a huge piece of the return of their index, and they missed it. The American Century Value Fund at the bottom, fine. On the next page, Fidelity Advisors Fund is fine, green. The Congress Fund, which is the second one, this is the replacement for the Brown Fund. You had the Brown small cap fund in the portfolio. That had underperformed. I talked about the conversations we had with Edgewood and Baird that went well. The conversation with Brown went horrible. I give them credit for being honest, but bad performance, bad conversation, fire, right? And we hate to fire people, but it is, it's what we have to do. So Congress, new to your portfolio. On this page, everything else is green, so I don't have to labor it. But if you turn to the next page, the bond funds have held up real well. You look at the scores in these boxes. And again, I inherited this portfolio, haven't really changed anything. Whoever picked the bond funds prior to me did a great job. The bond funds couldn't have done better. And then the last page of this report is just kind of a graph. Where you want to be is in that bottom left-hand corner. The bigger the circle means the bigger investment. Smaller the circle means a smaller investment. 25 and 26 are Edgewood and Baird. They're exactly where you don't want to be, right? But we talked about those. So, just to kind of wrap up, right? Underperformance in the portfolios, most of it attributable to a underweight in international stocks. We have two funds that should have done better, Edgewood and Baird. We're doing research on replacing both of them, although we still have confidence in them. Outside of that, everything else looks okay.
So on Edgewood and Baird,
Yeah.
how often do you flip your packages?
Yeah, not a lot. I've been here a year and a half. I think the one big change was that Brown Company fund in your portfolio. Other than that, we keep things pretty steady. We're kind of, you do your homework up front, you do it right, you make an investment. It takes kind of a cycle to really figure out if people are good or bad. And, most of them have done pretty well. So our manager turnover is very low.
On the two that you have here,
Yeah.
when you show them
Yeah.
where they are,
Yeah.
are they getting nervous about not being around?
Well, they're quite aware of where they are, and we're not the only people asking for conference calls, and special write-ups and, all the stuff we request. So yeah, they know where they are. And, I worked in the manager search group at Vanguard for 5 to 17 years I was there. And when you're in this position, it's tough because, right, your best ideas aren't working. People are taking money from you. You're selling your best ideas as well. It gets you into kind of this almost self-fulfilling negativity loop back, and you pray that things change and you can kind of see who's convicted and who's not, right? And the people who kind of stay to their conviction and own those same names and kind of tough it out, they're the people who ultimately do okay in the end. The people who go, oh my God, it's different this time and I got to change everything I do, that never works. So, Baird and Edgewood are in that camp where they're kind of sticking to their conviction and doing what they've always done, right? When we talk to the Brown people, they're moving all kinds of resources around, moving people around, changing things. It's kind of like, I get change is good sometimes, but, wasn't changing the way we wanted it to change. So this is part quantitative, where we look at returns and risk ratios and all those types of things. And then it's part, just sitting around a table with folks like you saying so, why do you think it's not working? What are you doing differently? What's the plan? And it's, part qualitative as well.
So
When do you think we're gonna have a stock price adjustment? Because things are getting a
Yep.
little out of crazy
Yeah.
right
No,
now.
that's a fair point. And that is the big concern. So I've lived through, 08, 00, 01, 02, right? 86 was kind of before my time. I was in college. The big difference here is the stocks that have the biggest valuations and have these ridiculous returns, they make money and they make a ton of it, right? NVIDIA is a real company that makes a superior product, and they've been doing it for a long time. And NVIDIA was they make chips, right? GPU chips versus a CPU chip. They've been around forever, and they started making chips for gaming systems. So if you've ever seen anyone play one of those kind of first-person shooter games like Halo or one of those types of games, right? It was the NVIDIA chip that made all that kind of possible. And then people figured out that this NVIDIA chip works for AI as well, right? And to kind of give you an idea of the difference, they make these GPU chips versus CPU chips. If I gave a 200-page book to a CPU chip and a GPU chip, and I said, read this book and summarize it, the CPU chip reads the book like we do. It starts on page 1, it gets to page 200, and it tells you what happened. The GPU chip takes the 200-page book and rips it into 200 individual pages, reads them all simultaneously, and tells you what happened, right? It's just a different, better way of doing some of these computations. So NVIDIA is a real company, right? Tesla is a real company. People might, have opinions of their owner, things like that. I get all that. But, you get the car company, you've got robots coming out, you got robots that do, real things, not just if you ever been to a Walmart warehouse or something like that, you'd be shocked how much work's done by robots, right? Microsoft's in there. So to answer your question, I don't know. I wish I had a crystal ball and could tell you. I do think the one thing that's different this time is that these companies that are driving the market and have the biggest valuations, they actually make money. And when it will stop is when people figure out that hey, AI isn't what people thought it was, perhaps, right? Or, there was an article in the journal not that long ago that said 90% of the AI pilots at companies right now haven't really generated a big cost savings, right? If people start to believe that, and right, that puts a whole new tint on those companies, and people aren't going to pay 40 times earnings for them, right? To your point, and that's when the prices come down. But until that happens, people are jacked up on AI, and the spending's out of control. The amount of money people are spending on chips is just, before, it was like pets.com, right? They had a big advertising budget. They had the sock puppet, you might remember, pets.com. It didn't make any money, right? Amazon wasn't making any money back then either, but Amazon had a plan to make money, and the pets.com in the world just went away. drcoop.com had a big valuation, right? Gone. NVIDIA's not going anywhere, Tesla's not going anywhere, Apple's not going anywhere, Meta's not going anywhere. I mean, these are real companies that make real money.
Well,
That was a long answer.
Lotions, right?
Yeah. All right.
Great.
Do you want to go talk about the other stuff? So it's actuarial season as well. Phyllis has pulled together some nice charts. The good news is your funding ratios went up considerably. 2 years of good market helps. The police went from 78.9% to 85.4% funded, up 6.5%. Non-uniform went from 71.9% to 82.4%, up 10.5%. And the firefighters went from 64.2% to 78.6%, up 14.4%. So your funding ratios all went up a bunch. Phyllis, you want to talk about the MMO or?
Well, first we received our state aid that came in on September 24th for $606,000. That was $42,000 more than anticipated because the unit value was more than anticipated. We had budgeted based on what we had received last year at $6,200. It came in at $6,665 per unit. So the first thing that we need to do is to contribute the state aid to the plan. We have 30 days to do so. So we need to make an October contribution to the plan of that same amount. The choice we have is how to allocate that among the three plans. What we've done last year was to allocate it according to the value, the units that were actually certified. We do have the option to take an excess in one plan and apply it to other plans to reduce our overall cost. That's not the best practice because if you're a certified member of the firefighters, for example, you expect your plan to be funded by the units so that they have been certified. So my best recommendation is to do the contribution of the state aid in accordance to the units that have been certified. To do that, a motion is needed so that I know how to make those contributions.
Which option is that?
That would be option number, well, if you look at the yellow column, that is the state aid that's been received, and it's spread according to the number of units that have been certified. Where it affects us is how we complete our obligation with our fourth quarter contribution. So this is actually a two-step process. One is the contribution of the state aid, which must be done by October 24th. And the second is to fulfill our MMO obligations for the calendar year, additional payments are due. Our MMO is satisfied by the state aid as well as the quarterly contributions that we've been making.
So you're recommending we do, excuse me, like what we did last year?
Yes.
And
Yes.
that would be
For budgeting purposes, that would be option number 2.
option 2.
Not using the excess funding of the firefighters to offset the obligation of the other plans.
Are there any risks of not doing that?
If we were to use the excess
Right.
to
Reallocate it in another fashion, is there something?
It is really just the optics. If you were, as I said, a firefighters, would you like the money certified from your plan to go into the police plan. Although we have the option to do so, it's really optics, how, you know. Would you like your plan underfunded?
I've had bargaining units complain about this. So I think the safest course is to just allocate it in accordance with the certified per unit dollars that are received. And, you know, it's not enough money to really make a huge difference. So I don't know that there's any reason to take the risk of getting an objection from a bargaining unit.
So I would think the only reason you would do something else would be that one fund needs help and the other one can help it.
Well, if you followed the percentage that Bill had just quoted for the evaluations that occurred 1/1/25, the firefighters are actually the least well-funded plan. So to take an excess current year funding to offset a liability for one of the other two plans, I would imagine would be objectionable.
That would be the kind of thing that if they pay attention to it, they could complain about. Because the overfunding that the allocation of state aid allows to the firefighters actually slightly reduces the underfunding of that plan. So I think it makes sense to just do it the way the dollars came in.
Make that motion.
You're making a motion for option number 2?
Well, that option is actually the second step of what we need to do.
Oh,
The first step we need to do
Oh, just the-
is make the contribution of the state aid.
Yellow column.
yeah,
Bill made that.
Dave made that motion. Okay,
You made
is there a second? Is there a second?
I will second it.
We have a motion and second. All those in favor?
Aye.
Opposed? The ayes have it.
The second
Okay,
step
now,
is how to proceed with the balance of our MMO that will be due by the end of the calendar year. As we're not using the excess funding from the firefighters to reduce the liability of the other two plans, we would be going with option number 2, where we need to contribute $104,000 to the police plan to meet the police MMO, and we need to contribute $57,000 to the non-uniform plan to meet its obligation. No further contributions would be needed to the firefighters as they were adequately funded with the state aid. So at this point, we're not making the contribution, but I have used option 2 in draft 1 of the budget. That contribution needs to be made by the end of the calendar quarter. So during our budget discussions, we may change the amount that we contribute. But just so I know how to proceed with our budget discussions, if the committee is in agreement, I will use option 2.
I'll propose option 2.
Second.
We have this motion second. All those in,
Is there a
question?
reason why we wouldn't use past practice?
Past practice means we contribute all of the state aid and we stay to our original quarterly contributions, which would take us significantly over budget.
Any further questions? All those in favor?
Aye.
Opposed? The ayes have it. Let's go with option 2.
Jen, to further answer your question, there were years when the budget was not quite so tight, and we were interested in funding our pension plans as best we could. So we did do all of the state aid plus the full amount that we had done with the previous 3 quarters.
The argument can be said that we've over budgeted, a number of times that,
Well, we haven't over budgeted, but we.
or not over budgeted,
Funded.
we've overfunded,
Yes.
right? Yeah.
That's not the recent problem.
Pardon?
That hasn't happened recently, has it?
All depends who you talk to. It's some people say we should be at 92%. We're at 98%. So it's kind of, are we or aren't we?
And they are, it's the minimum MMO, that first M is minimum. So, you guys are doing your minimum plus, so.
The next item we have to choose from is the MMO for 2026. With the valuation that was previously approved, and that was done at the September council meeting, we based our MMO for 26 on the valuation factors that were derived from the 23 valuation. However, now that the 25 valuation factors are available, we do have the option to amend what was previously approved. The blue numbers are from the 23 valuation, and that created an MMO of $1,623,000. When we use the same estimated payroll and apply the 25 valuation factors, that number is reduced to $1,536,000. So that it would result in a budgeted expense $86,000 less than what was previously approved. So what we would need to do if we want to go with the use of the 25 factors would be to recommend the council to amend the previously approved MMO calculations. As a comparison, page. So at the end of 24, we were using valuation factors from 2021. We did that because the 23 valuation factors were using the down market and resulted in a significantly higher MMO. So we delayed the use of the current factors in order to minimize what was contributed. You see where the 21 valuation factors we used for 3 years rather than 2? We delayed the use in 24 because those valuation factors from 23 were so poor. Now we have the opportunity to use valuation factors from 25 earlier than we need to. We could do the 26 MMO using the 23 valuation factors. We did that, and that was approved in September. Now we have the opportunity to use the current valuation factors sooner than necessary to reduce next year's MMO. Everyone follow that?
Yeah, I mean, Phyllis, I sit through a lot of these meetings. Phyllis has laid it out very nicely, probably the best I've seen anyone laid out one of these meetings. And yeah, I mean, because we had these great 2023 and 2024 in the market, you can go back and adjust your MMO and save yourself, in this case, about $86,000, I think it was. I see other folks doing this as well. So it's not uncommon or controversial or anything. It's
I
just.
think Steve would be proud of us if we save money.
That often happens when he's not here.
Yeah.
And then for draft number 1, I have used these newer valuation factors for the MMO. So if you would like me to go in a different direction.
Yeah. What's everyone think?
I think we should use the numbers, so I'll make the motion to use the updated valuation numbers to adjust the MMO.
I'll second that.
And I'll have worksheets prepared for council to vote on next week.
All those in favor?
Aye.
Opposed? The ayes have it. Great.
That's all I have pension related. Bill, do you have anything to add?
Just one last comment. We've always used Nationwide as your custodian, and we had some issues with Nationwide over the last year or so. Yeah, Nationwide did a great job up until about a year and a half ago, and they outsourced their middle and back office to another firm, and that integration went very poorly. And it really hasn't affected you guys. You haven't seen it, but my operations team works tirelessly to correct things constantly, and we have like a weekly conference call with Nationwide where here's the things you have to fix this week. And we've escalated it and got to a point where we just had to make a business decision that this was no longer a viable option for our clients. And we had some other clients who were using Schwab, which works very well. Schwab's a $10 trillion investment management firm. They have state-of-the-art technology. So we're going to move you from Nationwide to Schwab. It's going to happen in December.
Actually, the first payroll
In
of October, the October 2nd payroll
Oh, right, it's happening,
has been sent to Schwab.
right. So your accounts are open at Schwab. Assets going to move. And then, so we move them on like the 15th of the month. And then the first pension payment is the first of the following month. So we have batches of these people going out. So actually right now I'm up watching the game last night. Can't remember if you're this round or the next round. Are you October 15th or 12/15?
It's October 5th.
October 15th, that makes sense.
We're in our blackout period.
Yeah, right.
So,
October 15th. So next week, right, what will happen at Nationwide is they will sell all your investments. And then the money will get transferred to Schwab and we will rebuy a new portfolio there. Most of the funds will be similar, some will change. It won't be radical change because maybe there's cheaper share classes at Schwab, maybe there's a fund that's on the Schwab network that wasn't on the Nationwide network, things like that.
That transaction cost?
There's no real transaction costs. They're mostly mutual funds, so
So the selling and buying is not going to,
no, not really. It's not like we're buying like individual bonds or something like that where there would be significant transaction costs. These are big liquid mutual funds. So the one risk is there will be a day where you're out of the market, right? They're going to sell everything at Nationwide, right? The next morning they gather the money that comes in, they wire it to Schwab. Our trader will put the trades in. They don't settle till 4 o'clock. That's when mutual funds settle. So there's one day where you're out of the market.
And
There's
that can't be moved in kind?
Unfortunately, not from Nationwide. Once we get to Schwab, if you were to leave,
Right.
then everything will go in kind, right? Now you're seeing the problem with Nationwide. Everything's,
Kind of sounds like Wells Fargo.
yeah.
Yeah. I won't go into that.
Yeah, like I literally sign like trade, like paper
Right.
at Nationwide, where, Schwab, everything is purely electronic and, right? So, yeah, every week I walk in and there's a stack of Nationwide forms like this, and I physically sign forms. So, yeah, so the good news is moving to a better custody platform, reporting will be better. The things you can, like for Phyllis and her team, to self-provision will be better. Like these reports that come out to show you what the returns for your funds are. There are things she'll be able to pull up. So like even in the middle of a month or a week. So if you wanted to know, hey, how are we doing year to date? Phyllis could in theory do that. So, in the long run, it's better. And it'll be cheaper, which is always good. But just want to bring that to your attention as well.
Okay. Anything else for Bill? Thank you, sir, very much.
Yeah, thanks. Yeah, thank you. I appreciate your business. Appreciate your time. Thanks a lot.
Keep making us money.
Trying. Make money or die trying, right?
That's it. That's it. And go Phil.
Yeah, go Phils. Go Birds too. Big night.
Yeah.
All right. Thanks a lot.
Thank you again, Bill.
Thank you, Bill.
Thank you.
Okay, we'll move on to item 4, cash update.
We are talking at the end of September. Cash and investments totaled $10,497,000, a $70,000 decrease from the end of August. There is a few grants currently pending, 2 for bike share stations, 2 different quarters, as well as some funds from the fire commissioner for turnout gear. What we're experiencing now is because of the state budget impasse, funds are very slow to come to the borough. We'll get our money, I guess, when that gets resolved. Interest rates have fallen. This is the first time we're seeing rates at Pliget below 4%. So Rory, the intern that was with us this summer that recommended that we buy some investments to hedge the first interest fall, texted me to remind me of what a great recommendation that was. Of the Pliget investments. I don't have the Tompkins statements yet, that's why that's orange. For the Pliget investments, excuse me, of 9.9 million, we do have the 3 million invested in term at 4.15%. The class investments have dropped to 3.97%. The prime is still at 4.23%. So I leave as much as possible sit in prime at that lower, at that higher rate, but I'm only allowed to liquidate twice a month from that firm. So I have the time when that money comes out. You can see the future rates that are projected over the next year by Pliget. You can see that they do continue to fall, but not significantly, fortunately. So at this time, there is not additional funds available to purchase further projects because we do have a large number of our capital projects where funds will be needed over the next couple months. For the month of September, revenues of note include real estate taxes of just $26,000. Other local taxes on cycle total $612,000. The state pension aid was received for $606,000. The fire relief allocation of $66,000 was received, but that was also forwarded to the Relief Association in the same month. So you'll see that as an expenditure. We also received the second receipt of the Benecon surplus, which was from 2024. So it is less than anticipated, but those funds did come in, so we know what the current variance is. For the month of September, revenues totaled 2.7 million, bringing our year-to-date total to 21.4 million. It is less than the prior year because the prior year we were receiving note proceeds as we constructed the garage. When we look at the expenditures of note, we did make the third quarter MMO payment for $198,000. That those funds were forwarded to the Relief Association for the amount received of $66,000, and we made the second payment on the sanitary sewer for $74,000. Expenditures for the month of September totaled $2 million, bringing our year-to-date total to $19 million. On a net basis, we did receive more revenue than expenses of $621,000, bringing our year-to-date surplus to $2.4 million. When that $2.4 million is added to beginning fund balance, we have an overall fund balance of $11.8 million. 1.9 of that is reserved for future commitments, leaving unreserved fund balance of $9.8 million. Pending activity includes those grants, which total $29,000, as well as open permit fees of $4,000. So together with pending activity, we have unreserved fund balance of $9.9 million. The reserves include all the items previously accumulated. For the month of September, we added $10,000 to the MS4 reserve and additional proceeds from the bike route, the bike sharing stations. So not a lot of activity in the reserves. Budget variances for the current year. I did update the schedule to show the actual Benecon reimbursement is $20,000 less than we had anticipated. I also updated the firefighter staffing variance. While we had accumulated a variance for the firefighters for all the overtime that was worked, it's now partially offset by the vacancy in the chief position. So that amount has been reduced to $48,000. Additional variance recognized for the month of September, the $42,000 is the excess state aid we received, more than we had anticipated. And both a plus and a minus for the volunteer fire relief allocation. Although we did receive 1,900 more, we turned over 1,900 more to the association. So on a net basis, our current year budget variances that we've identified totals a negative variance of $290,000. Any question on our financial position? When you look at revenues at the end of August, outstanding real estate taxes total $234,000. From the collection reports, $25,000 has been received for the month of September. $12,000 of that was received in October, and $2,000 was received from collections from August. So that our gross real estate taxes total $15,000. Outstanding at the end of September is $208,000, or 3.5%, which is pretty much on par with the prior year.
We receiving taxes from the 3 properties that in Wyomissing that were supposed to go up for tax sale? Like the Redmond properties?
I'm not familiar with those.
Because they
Well,
did,
there's only 2 of them that are,
there's 3 of them.
there's 3 properties, but only 2 are under,
Well, I don't know. They've been there for a while. Have we been getting tax payments from somebody on those properties? Is that accruing or where is that situation?
they're up for sheriff's sale.
I know, but have they paid taxes in the last 3 years? But they owe us 3 times as much as.
If they haven't paid their taxes, they would have been turned over to the county for collection. And the
Which
county,
they are.
yeah, and then the county disperses to us without much detail, so I really don't.
Well, I didn't know if you knew, but if there is an issue outstanding, it should be quite a bit of money based on the size of the properties. Time that they've been sitting there.
There was, I want to say, last month, there was a bidding process for 1198 Reading Boulevard. And I haven't seen anything from that. But again, that's up for sheriff's sale, as is Regency.
Well, I understand that. It's sort of a separate subject. If they're up for sheriff's sale, it is what it is. The question is, the properties have been there for several years. And I'm just trying to figure out how much money somebody owes us at this point.
Taxes would continue to accumulate,
What's
and
that?
taxes would continue to accumulate, and the county would have them for collection.
That shows up where in our balance
That's
sheet?
not, we're on a cash basis, it only shows up when we receive any portion of that.
So if somebody does, if I don't pay my taxes, how do you know I didn't pay my taxes?
It's turned over to the county by the tax collector.
And at what point do you call me and say, Ron, you didn't pay your taxes? Or do we find out at council?
You don't.
Tax collector.
Tax Claim Bureau handles that.
County.
Eventually, we get
Some kind of a notice, just go up on that sheet that says somebody owes us money.
Chris, do you know how much time, after something goes up for sheriff's sale, how much time does the successful bidder have to pay the amount?
I can't tell you exactly, but it's
It's
usually
36
fairly
days.
prompt. Yeah.
At that point, we would be paid.
Yeah, when it goes to closing after the sheriff's sale, then there's a distribution and we get paid eventually through that process. So it's a couple of weeks after the sheriff's sale if it's a successful sheriff's sale.
So we may be getting a windfall that we don't know about yet.
I haven't heard of any transactions that came out of that. I don't know whether it's been extended or what happened, but, it was very low. I think it was only like 118,000. That was going to be the minimum bid.
118,000.
Yeah, that's all.
Well, they're taking.
Well, that's what's owed. That's what's owed.
What's
I'm sorry, that's what is owed, but, and that's the only number that's published.
Oh.
No, we do have couple liens on that property. For, number one, for landscape,
Be utility lien.
and there's a utility lien that the borough has on that property also.
And we will get that. I mean, they buy it subject to
Right.
those liens.
It was $118,000 was the low bid for that property.
No, that's what was published in the paper that is owed.
For taxes.
Taxes.
Taxes,
Oh, just taxes.
just taxes, yeah, property
I
tax.
have no idea whether it's sold or not,
No,
Well,
well,
I haven't heard anything.
I haven't, I don't know.
but you bid on
I did, but they turned it down.
Only it's 117.
They turned it down, so, okay.
I will say that, nothing, driving by there, I've not seen any activity,
No,
so
it's just going down, 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 unfortunately.
what a shame.
Yeah, it is, very.
With a $15,000 gross tax, we did receive $9,000 in delinquent taxes. That does come from the county. That's how I receive it. I receive a monthly distribution, plus penalties and netted down by discounts. The borough received $26,000 in net real estate taxes for the month, bringing our year-to-date total to $5.8 million. With 9 month worth of data, I have started projections for year end. Those are noted in blue on the right side, and you'll see that I have estimated 5.8 million where we had budgeted 5.7 million. So a positive variance of 100,000 there. For local taxes for the month of September, 612,000 was received, bringing our year-to-date total to 5,362,000, more than last year, as well as more than our year-to-date budget. Again, in blue, I've noted what I'm projecting for the year end to total 6,485,000, which would be 602,000 more than budgeted. You look at real estate taxes for the month of September, 56,000 was received. For the month of October, we have received 24,000, bringing our year-to-date total to 706,000. With that information, I'm projecting that we'll end the year with 760,000. That would be 294,000 more than budgeted, and you can attribute that to the transfer of the knitting mills. So we do need some of our commercial activity in there to meet our budgeted amount. For earned income tax during September, 457 was received. For October, 163 has been received, bringing our year-to-date total to 2.7 million. Projecting to end the year with 3,375,000, 25,000 more than anticipated. For mercantile tax, in September, we received 13,000, bringing our year-to-date total to 1,673,000, projecting to end the year with 1,750,000, 258 more than budgeted. And for local services tax for September, 65,000 was received, 700 was received for October, bringing our year-to-date total to 458,000. I'm estimating that we will end the year at 600,000, 25,000 more than anticipated. Any question on September or year-to-date revenues? Okay. When you looked at expenditures, the Stonehouse retainer is still pending. There is some issues there with grass restoration and washout. For the sanitary sewer, during September, the first application, 74,000 was received. We have not received anything further, and we are approaching our budget amount there. For the West Lawn Interceptor, the Infrastructure Committee did approve the first application for 27,900, and that is pending council's approval next week. no further activity on the storm sewers. For the Oley Street Water Project, there was a change order for final quantities, and the Infrastructure Committee approved the final distribution for the water project, $17,715, and that is pending council's approval next week. Berkshire Heights, there's been no additional activity, although I'm told that I will get one big application forthcoming in the next few weeks. So they hope to have that project finished this year. However, it is unlikely that we will receive our grant reimbursement this year because of the timing of the construction, as well as the holdup of the state funds. Let's see, for the swale project, the Infrastructure Committee did approve the first application for the full project, but there was issues there. I believe there was a washout, and it has not yet been resolved to my knowledge. Does anyone from the Infrastructure Committee have more information?
I haven't heard anything.
There. On the street project, the first application for $121,000 was approved by the Infrastructure Committee and is pending approval by council for October payment. When I look at total capital expenditures during September, the mattresses were purchased for the firehouse for $6,000. $10,000 was paid to Western Berks Water Authority. That was a contribution towards the cost of some previous repairs. We are in our second year of 5-year plan to pay those costs. And the sewer application is $74,000, brings the total for September to $90,000, and our year-to-date total to $1,219,000. So there are a lot of large payments that are pending under capital projects, which is why I'm not recommending investment unplated at this time. Any questions on September or year-to-date expenditures? Okay. So with 9 months of information, I've made the first projection for year end. For revenues, we budgeted $27 million. At this time, I'm estimating we will receive revenue till the end of the year of $24,946,000. That is a negative variance of $2,054,000 that can be attributed to the non-receipt of the garage reimbursement. That is $2.4 million, as well as the Berkshire Heights grant reimbursement. Those two items offset our positive variance in the local taxes, and all other revenues net to $5,000. Okay. For expenditures, we had budgeted $27,724,000. Expenses are projected to come in less than that at $26,616,000. It would be a positive variance of $1.1 million, mostly due to capital expenditures. There's variances in actual costs versus estimates, as well as timing of completion. There are projects that will fall into 2026. We're aware of the general insurance variance of over $200,000, which is offsetting the capital projects positive variance, and all other items are currently netting to about $400,000. So I'm estimating that we will end the year with a deficit of $1,669,000. That is $945,000 worse than we had budgeted for. We did have a positive variance in our beginning fund balance. When we estimated these numbers, when we budgeted last fall, we had estimated a fund balance of $9,416,000, and we actually started the year with $9,454,000, which was a positive variance of 38. So my best estimate at this time is that we will end 2025 with a fund balance of $7.7 million, which is $906,000 worse than we had anticipated. That's a good news. Any questions on my projections? It is a very fluid number. I've put in a lot of guesses between I don't have a crystal ball between now and the end of the year. We are making some large guesstimates as to the timing of our capital projects. We're making some large guesstimates as to the timing of receipt of reimbursements. I'm not anticipating we're going to receive that RACP money. So this is the worst case scenario.
My question was about the RACP money. I know once that comes in, we plan on taking 2.1 or 2.2, whatever portion of that to pay off the loan. But was there a deadline?
Yes.
Are we gonna make that?
We can, the loan documents permit us to make a prepayment, a
Right,
one-time prepayment of 2.1 million. We're
Right.
not required to do so, so it was not budgeted as an expense this year, and it was predicated on the receipt of the reimbursement.
What is the deadline?
The deadline is June 1st of 2026, yes, 2026.
June 1st.
June 1st. So
Do
it
you
is,
think it's gonna come in by then?
for 26, in my first draft, I budgeted both the receipt of the reimbursement as well as the prepayment of the loan. But we are not obligated to make that prepayment. That is an option that we have.
Thank you.
I do have a summary of some of the assumption I've made in preparing draft one. So if you'd like me to go in different directions before that meeting and save some time with the first budget meeting, which is scheduled for Wednesday, October 22nd at 8 o'clock. Is that correct, Melissa? Just as a reminder, that is our first planned special budget meeting. And I have used the following.
The apps.
Yeah, I have used the following assumptions in preparing my first draft for that. For real estate and road tax, I've not estimated any rate increases. I am waiting for an updated abstract from the county to get a fix on what the current value of property is. With the help of the Berks Earned Income Tax Bureau, for next year for local taxes, I've estimated 1 to 3% increase based on the different categories of taxes. Currently, there is no water, sewer, or refuse rate increases. So we have limited sources of revenue that we can play with. It's not like we can float a new product or do any kind of sales push there. These are the revenues we have to work with. On the expense side, the current CPI, which would be for August, is running at 2.9%. So a lot of our contracts are fixed to the CPI. The next available release of that information will be on the 15th. So I should have updated values for our first special budget meeting. We are aware of a large increase anticipated for general insurance. Based on our losses, we're told to expect approximately a 35% increase in general insurance.
How much does that equal?
100,000,
How much?
couple 100,000. The library did request a 6% increase for 25, and it was not submitted in time to make our last year budget. So they have not had an increase since 24. So for the first draft, I have used what they requested for 25, and that was a 6% increase. We have been informed that there's been no increase to Western Berks Ambulance, the Animal Rescue League. I've made no changes to the overhead transfers. For water purchases, we're told that there are some potential grants available to cover some of the capital needs, which we were informed about last year. The actual rate increase for the water usage is pending, but we're told by Chip not to expect anything crazy because it's not including capital needs. Sewer treatment with the JMA, we're told to expect a 5% increase. It's not finalized yet, and the refuse increase will go according to the new contracts. I have 2 of the 3 contracts. I'm waiting for the 3rd. For wages, there are increases built into all the CBAs. It covers everything but the administrators, and I have budgeted 4% to keep up with what's in the CBAs. Health insurance, Melissa just received those rates yesterday, and it's between a 19% increase for the single coverage and a 20% increase for the family coverage. The public works part of our staff will be going with the Teamsters coverage, which is actually significantly less than what we have with Benecon. For new staff, I have no new bodies planned, just filling vacancies that currently exist. You look at me like you.
I thought Greg said that they're going to request an
Yeah.
additional person.
Greg came back to me and said he's not requesting additional public works staff,
Okay.
but he is asking that we get better qualified part-time staff that supplement the current staff. So that the increased costs for those people have been included, but not benefits for all those people.
Thank you.
Under capital expenses, I do have everything that department heads have requested. Under infrastructure, I have planned projects for the streets, the sidewalks, and the sewer, as well as anything that's carried over from 2025. You'll note that there is no water project planned for next year, but they do plan some purchases of some equipment, meters and our commercial meters and valves and things. So their materials and supplies are high, but there is no capital project planned for next year. Under facilities, I've included the renovation at the firehouse at a pretty significant price tag, as well as the ice pound restoration. And I have included the debt service, the prepayment to Webster. So if you're interested in what those numbers are, using a lot of guesses, and I have placeholders for every number in there. It's a very fluid document, and as information becomes available, I make those changes.
Are our insurance premiums and health insurance premiums, are they an annual increase? Or is it based on incident or number of people? Or how do you know?
Well, general insurance is based on instances, and we've had a lot of losses. And so I believe we were happy that they were willing to reinsure us, but the rates are significant. As far as the health insurance, that's based on our staff and our claims, and the fact that half of our people are going to be going to the Teamsters.
Where?
Teamsters. Public Works have moved to the Teamsters for coverage in union organization.
And Steve told us that health insurance premiums were going up significantly.
Yeah.
So my first pass of the budget, using all those estimates, is a deficit of 6.7 million.
Are we shopping our general insurance now? Because it looks like the insurance company we now have not like us even more if something else happened.
Defer that to Melissa.
We have a broker, they do what they need to do.
Just changed brokers then recently. Yeah. Changed.
Oh,
So with the assumptions you see there, would you like me to go in any different direction for our first budget discussions?
If we keep it where it is, and let's just see what's presented to us, and we'll go from there. You know,
So all of
as I
this-
said, we're going to be sharpening the axe.
All of this with the numbers that you have, puts us at a $6.7 million deficit.
Which pretty much eats up our fund balance.
Yeah.
Like you're gonna need a chainsaw on that.
Some things we have control over, others we don't. No. Yeah, like Steve said, industry-wise insurance, that's 20% increase. That's not just Wyomissing, that is industry standard. That's increased.
but we're also conflating a insurance increase that has nothing to do with the general increase in insurance. Our increase in insurance has come specifically from incidents that increased the insurance premium.
Well, Phyllis had two different numbers. She had health insurance
Oh, yeah,
This is
yeah,
what
I
Steve was
understand,
talking
health
about.
insurance
and
went
then
up.
general insurance
General,
Yeah.
for
which is paid for.
screw-ups to some extent.
So our general insurance would have been flat had we had no incidents.
No, nothing's gonna be flat, but it wouldn't have gone up.
It wouldn't have gone up as much as it did.
Well, 35%, pick a number.
I know, it's,
Two?
yeah, crazy.
We always expect some expense.
Sorry.
We always expect
Yeah.
some increase. But because of the losses that we've had,
Yeah, I guess.
Right.
significant.
And they look back for a number of years, so this is going to haunt us for a couple more years.
Which is not the case for health insurance. We don't look to see how many people died and then they increase our health insurance.
That's life insurance.
Right.
Okay.
Wish I had news.
No, I wish I had better news, but
It is what it
It's not a
is.
surprise. It's not like we didn't expect this, so.
We're not killing the messenger.
She always smiles, so that's a hit.
all right, so with this information, as I said, I do have placeholders for every number at this point in arriving at that 6.7 million. As more information becomes available, I continue to update it.
Very good.
Let the pain begin.
All right, so that's the finance.
Yeah, but just drop when you move the.
So a few other items talked about, results in budgeting and pension. So we are on number 8.
Hey,
I do have some images available, Bill.
good, okay.
Uh,
These for the new vehicles or
Oh, this is for the chief's car.
the chief's car?
Yeah, when this was originally done, the graphics were not great. And it does not even look like
Emergency vehicle.
doesn't look like an emergency vehicle. And it does not match the rest of the fire department's vehicles and their graphics. Now, the Relief Association recently did the graphics, paid for the graphics on the new utility truck, okay? And which matches everything else. And if you haven't seen it, it looks pretty sharp. And so the fire department is asking that we do the same for the chief's car. And then everything matches.
And one of the firefighters designed it.
This is designed by one of our firefighters, and which he's done a tremendous job with it. So, and I'll make the recommendation that we approve or propose to council the $3,530.58.
I'll second that.
Motion and second. Question on the motion.
Are we redoing a truck or we're doing the truck or we just have a schematic that somebody drew that we didn't?
We're doing what you see right now. There's a strip there, and at the very bottom it says Wyomissing. And that's all it says.
All right, so that's what we don't like.
Right. This
Okay.
is brand new. This, this matches, and you have to understand too, there's a morale issue with this too. Everyone, regardless of where you are, they're proud of their equipment, okay? And it increases morale and so forth. So this is just another step in increasing our morale within our own fire station. So, did I word that correctly? So, any other questions? We have a motion and second. All those in favor?
Aye.
Opposed? The ayes have it. We'll move it on to council. Okay. Okay, next we have item number 9, which is the engagement letter. And has everyone had a chance to review that letter?
Retainer the same as it is now.
Yes. For 2026, the retainer and the hourly rates will remain the same as they are this year.
If you're asking whether a written agreement is identical, my understanding is we can't find any retainer agreement with Chris's firm.
That's not true. I have it.
I did a freedom of information request, right to know request, and was told that it could not be found. So,
I don't have it with me, but there is I received it from your office,
Well, I think,
or it was rewritten.
well,
I
what
guess.
I think we did is we confirmed what our existing arrangement borough is and has been. The retainer was set the last time that the borough did a request for proposals for solicitor services. And that was, I think, when Bill Murray came on council. So that was actually the second time that I interviewed for this position. Anyway, so that retainer amount has been in existence for quite a few years at the $7,000 amount. And the hourly rate has gone up a couple of times over the years to the current amount of $200 per hour.
200.
We're outside the retainer services. And again, the categories of activities that are outside the retainer, that has also been in existence for many years. I know there was an engagement letter when I started services 18 years ago, but I don't have a copy of it, and apparently the borough doesn't have a copy of it. Can't explain that.
So in reviewing our invoices that we've received, as Chris mentioned, the hourly rate of $200 an hour and the retainer of $7,000 per month will remain the same as Heidi or Misano Bradley has outlined.
I think one thing that sort of concerns me that we haven't looked at the additional services for a long time. As an example, is it necessary to have a council and our committee meetings? And I think that at some point, maybe we should have done it before we got this letter, but review what additional services that they're performing that perhaps they don't have to perform.
Well, all of the committee attendance and the council meeting attendance is within the retainer.
So the committee meeting, that's part of the retainer.
Yeah, the committee meeting attendance, council meeting attendance is all
Okay.
within the retainer.
Okay, well, that answers that then. Okay, all right.
I've got a few
See,
comments.
even on the screen, is this retainer agreement on that screen?
Mhm.
That's
Right there.
There it is, yeah.
I oppose the way this came about, but I respect the fact that a majority of council voted in favor of it. And in the spirit of implementing what council has decided, this does not say that Heidi Fasano is the lead attorney or that Mike Gomber is the second person for us. And that's what was proposed originally. To the extent that council was relying on those designations, I think the letter needs to be revised. There is no mention of malpractice insurance. The Code of Professional Responsibility says that if we have malpractice insurance, we are not required to say so. So the silence indicates that they do have malpractice insurance, but we don't know how much. And that is a concern because you might know that in the latest version of Exeter residents versus Exeter Township, their solicitor was was sued in addition to the township. So I think I would want to know what the policy limits are for professional liability policy.
Oh, go ahead, continue.
The bills have to be paid very quickly. And one question I have for Chris is, why does council review some bills but not others? We get what I will call nickel and dime bills through infrastructure, or might be having to approve a $1,000 bill. But we're not asked to approve bills. The attorney's fees from my right to know requests have been several $100,000 a year for many years, and that never goes through council. And so could you explain why we review some but not others?
Council does approve the
The checks at the
The
end.
accounts payable.
But we don't see
You don't see that.
the bills like we do McCarthy approving something and moving that on.
Well, that's, I guess my explanation of that would be that to the extent that there's an ongoing engagement of professional services, there is an established contract and the bills are presented in accordance with the contract. The bills that you're referring to that go through infrastructure are new contracts, and the reason why the committee has to review them and approve them and council approve them is because they are new contracts, not existing contracts.
But all your fees aren't based on contracts, are they?
They're based on our engagement with the borough. So, I mean, so that is, the engagement is a contract.
So basically this letter
Yes.
says 7,000 retainer and $200 an hour. That's our contract.
But they don't tell us specifically. I mean, there are specific things. You have meetings and so forth, who aren't necessarily by contract. Is that not, maybe it's a play on words.
I do want to point out that in the second paragraph of basis billing on page 2, if they listen to a voicemail message, that's $40. If they read an email, the minimum fee is $40. So all this can add up in a hurry if it is not within the $7,000 base. And,
I'd like to ask a question. Chris mentioned a while back about having a retainer agreement 18 years ago, and that somewhere it disappeared. But in the meantime, the individual projects that you've worked on that fall into categories that are being discussed now, was there a revision to any of the manners in which you were conducting business here that became a constant over years that aren't mentioned in this letter will ultimately come up, like you just mentioned, the issue of how much time you're going to spend on a phone call or that kind of stuff. Are those things available now for it to be included in this agreement? Because it seems like it's almost an agreement if we say yes, but then there's another number of things that are going to pop up that you've been doing that aren't in this agreement that are now going to have to be discussed by council to put it in. Because essentially this is the retainer agreement, and outside the four corners of this, they have to renegotiate or start over again on those items.
Well, I think this is a typical retainer letter, and the terms that are described in this are, I'm confident, similar, if not identical, to what would have been in our retainer arrangement with the borough and with other clients.
Well, it would seem to me that it's just as easy to take what council agreed to, which was to retain Misano Bradley, Misano Bradley. And, okay, great. So now, when you get to the part when you're in January, or between now and then, you can have all kinds of discussions about you talking to them about, you know, how much does it cost to look at an email? That's sort of, all those things can come up and be thrown into the retainer agreement when you open the door and find out everything else it's going to scrape out, and then put that in the retainer agreement. There's no reason to say this is the retainer agreement, because you've just asked questions that aren't in there. So we're starting on modifying an agreement, which pop up with all kinds of things.
If I can make a couple more comments. We had agreed that they would not be representing us with regard to the NAMDAR litigation. They would not be representing us with regard to personal matters for fire and police. This is not clear in the retainer agreement, and I think it should be.
We call the shots. And if we don't want them to represent us on that, we tell them, no, you're not representing us. Doesn't have to be in a form of a letter.
Do you have any other comments, Janet, about it?
Those are my comments. Thank you.
So the way that I read it, and maybe this is just my non-lawyer showing through, I mean, I did read your portion about, in reference to emails and voicemails. And maybe it's my own naive reading about it. Reading above in the retainer portion, they did reference about responding to general inquiries overall. So again, my question of clarification would fall between what emails and voicemails fall under general inquiries within the retainer versus, I see your point, we don't want to, every time they open up an email or every time they receive a phone call, that's going to all of a sudden start the $40 clock every time that occurs. So is there a way for those, everybody else, I don't quite know how to articulate it, is there a way we can ask that or get that clarification or request a change to this?
I think it should be read as these billing increments apply for the work done in excess of the $7,000 fee. I mean, that, I think that's implicit. I think it could be clarified.
Okay.
But I also just want to caution people about how quickly bills can add up if you're charging $40 to listen to a voicemail message or read an email.
Understood. So that's the fee after we've met what they bill as
Well,
the retainer amount?
No, it's, the way I look at it is there are two different pots of work, if you will. The basic is attending council meetings, doing ordinances and planning commission, and preparing for those meetings. And the other work is anything else. So if Melissa has a question about the zillion right-to-know requests she probably gets weekly, you know, what she's required to do in order to comply with the law, that is outside of the 7,000. So we would be billed for that at the rate of $200 an hour. But to read an email from Melissa is going to be $40. Or listen to a voicemail would be $40. And so I think we need to look at the bills, if nothing else, and see, well, we need to be aware of what these services are costing us.
So your main concern is bringing visibility to what we're being billed on a monthly basis?
Awareness.
Okay. So would that be something you feel like you would request be added to a meeting? And which meeting do you feel like that would be the most appropriate place?
So, well, and what you're doing is you are asking our borough manager to tell us why she made a phone call. Well, yeah,
No, I feel like.
No, I'm not.
I think her question is more, she wants to see the bills on a monthly basis. So if we're writing those out and we don't, compared to other things we pay as council, we don't voice vote to pay those invoices.
so you see a bill that there were 10 phone calls made to council. And you're going to do what with that?
I don't know. I think we just should be aware
I think
of
she's
how
looking
much we're paying.
for an awareness of it, because if we don't know how much we're spending on council, we don't know
I
overall.
think we do know how much we spent, roughly.
Well, the $7,000, you got to put it in some pot. You don't just get $7,000.
Because there's also, you got to remember also, there's certain legal aspects that are charged back to a job. Okay, a developer or whomever.
Understood.
Am I correct?
That's addressed in this retainer agreement as well.
As to the second paragraph under basis of billing, which is what we're kind of discussing, would it make more sense to clarify that the voicemail messages that they listen to and in turn respond to? You know, if they listen to a 2-minute voicemail message and say, oh, I'm gonna get back to that later, are we being charged the $40 for them to listen to it and then again another $40 for them to spend 3 minutes responding? I think if we get clarification from the firm on that, that could help. And I understand if it's out of the purview of the retainer that yes, we have to pay for that time. I agree we have to pay for them responding to emails and reading emails, like text messages, all of that, but I believe it should be sort of a listen to and respond are within that same 12-minute window of time that we're paying for kind of thing. And that would make more sense to me.
And it seems to me that the second paragraph in B really should be a subset of A2, so it's clear.
Yeah. Yeah, I think clarification on that paragraph would be helpful so that we're not paying $40 to listen to a voicemail and then $40 to call somebody back 3 hours later when they have time.
And also it says, you know, the bills due upon presentation. Well, I mean, my bills, I give the clients at least 10 days to review the bill. And then the payment's due later, so I think we ought to have a specific period of time to review
I
it.
think people know that it doesn't get paid until it's approved. I mean, how far do you want to go with this? There has to be a certain amount of trust.
Well, if you stop,
We don't have to approve any of it,
Exactly.
so it doesn't.
I mean, it seems to me, when you say the minimum time unit recorded is 1/10 of an hour, and minimum intervals of 2/10 of an hour, charged for all communications and correspondence, period, end of story. If I call somebody and it's a voicemail or an email, and it's already now subject to another section of conversation, I mean, you've already set up 1/10 and 2/10. And if you talk to somebody for a half a minute, so what? I mean, you're not going to treat it as a phone call or an email or a text message. What's the point? Well, it's sort of nitpicking, I think, when you're talking about $84,000 a year. We haven't even identified where that's
Outside of that.
Well,
outside of that. Well, we don't even know what the $7,000 applies to yet.
Yeah, we do. Yeah, it doesn't.
Yeah, that's spelled out.
Well, right, it covers a lot.
It
It
does.
doesn't cover voicemails and emails.
It would, if it relates to that, I think it would.
Well, that's interesting, huh?
But if it's ambiguous to people here, then I think it speaks to the need to clarify.
Right.
Did the full council get the letter?
yes, absolutely.
As part of the finance packet.
Right.
Part of the finance agenda.
But does the full council get that?
It'll go
Yeah.
to council next.
No, but
Yeah.
in detail, we'll get to see the detailed letter
This is.
in the packet.
We got it with the finance agenda
Right,
first.
Right. So it's
But
like
the whole council
council,
got that.
And it
We'll
should
also
go
see
in.
that.
Council's copy.
We've already approved it contingent upon this
Right,
letter.
right,
So now we have the letter,
right. I want to make sure that full council gets the letter.
they already have, and it was acted on at the September council meeting.
That's not,
That was a different letter.
yeah, that's the hiring of Heidi.
Right,
Company.
so now, right, it was contingent upon receiving the letter. Now we've received the letter, and you want to make changes, have changes made, is that correct? Okay, so we don't keep going back and forth and say, well, now we got to put this in, or you think of something else and we should include that and take that out. What exactly do you want to see in the letter?
Want me to repeat what I've already said?
Are you making it in a motion?
I can, I'm not on the committee.
Oh,
We also don't have all
That's
council
right.
here.
Right, but I think the intent,
the intent is to get, because, if the committee wants to see something else, okay, then let's see if we can get this done, get Massano Bradley to make that addition, and so we have it for Tuesday night. So we don't keep going back and forth all the time as we do with so many other things.
You could make a motion approving it subject to XYZ changes. That's not hard to do.
So you want information on malpractice insurance.
Yes.
You want Heidi named as the lead and Mike as follow-up.
Yeah.
And we want clarification on chapter or on paragraph 2 of billing.
Paragraph 2, I think, belongs up, is part of A2.
Should we
Just
move
wanna
to
make sure that's
A2, but
clear.
we need more, also clarification on voicemail messages and responses or et cetera.
Yeah, and I would just,
So those 3 things.
well, and also, I think we should have an explicit amount of time to review the bills not payable upon presentation. So I would think we should have a minimum of 10 days to review the bill.
And a minimum of 10 days to review the bills.
I would say the bills are reviewed a little longer than 10 days.
And 20 days. But not upon presentation.
How long do we have to review the bills now?
The bill is sent to us,
Right.
okay? And the bill is then reviewed,
Right,
okay, by
right,
Michelle.
right.
She signs off on it, and then it goes to Phyllis.
But yeah, the question is, how long does that process take for her to sign off of it and then Phyllis to sign off on it?
Reasonable period of time.
I mean, as I've said before,
Someone receives it, we need a week's cycle. So it
Yeah.
depends on what day of the week I receive it.
Okay, so 20 days should be, do it.
as I've said before in other things, sometimes we got to detail everything so much that we ended up backing ourselves into a corner.
Well, we just backed ourselves into a corner now by coming up with an agreement that council isn't going to see. And then you're suggesting that we have a council meeting and they don't have a document to read, to vote on. And that's what you want to do.
Everybody at council has received a copy of this.
Well, they won't have seen.
The
what's
revision,
going to
that's
be
correct.
revised.
That's, hopefully, I haven't gotten, hopefully, would you ask Massano Bradley if they can make these revisions or these additions, because they're not revisions, they're additions. And if that can be presented to us for council meeting on Tuesday night.
If somebody has contact information, I don't know, that's been.
At this point, I'll give you contact information.
So what we're going to do on the Tuesday night's meeting is have a discussion about this letter agreement that we're all going to get after we put it together and Heidi writes it and we all get it. Then we'll all read it again and go through it at our council meeting.
Yes.
Okay, fine with me.
But we need, first of all, so somebody from this committee needs to make that motion to have this done.
so I will make,
And we don't have that yet.
so I will make the motion that we want to have revisions to the letter. I want to make sure we get clarity around the revisions we're looking to include. Jen, can you go over the revisions you were looking at one more time? I think you had the most complete.
But hold on a second. If
We
you-
wanted informational malpractice insurance. We want to add that Heidi is the lead and Mike is the follow-up. And paragraph 2, under basis of billing, should be listed under A2 for all other matters, with more clarification on whether or not that 0.2 of an hour includes the listening to or reading of in addition to a response.
And then additionally, we want adjustment to
Oh, in
Janet's
addition-
paragraph.
yeah.
Is that about the billing?
20-day window to review billing. It's right here. For Michelle and Phyllis.
Is there a paragraph number in general terms?
Third to last paragraph.
Yeah, because
So
it
is
says
somebody
upon
making this
presentation.
motion?
I'm making the motion. I'm trying to get the paragraph. So under section E, paragraph 3, adding a minimum amount, an amount of 20 days to pay the bill.
But the finance committee is doing what you're doing right now.
Would you help me understand?
What you're putting together right now
Yes,
is a motion of the finance committee.
correct.
And there's 3 people here to do that, right? 1, 2, 3. So you guys are putting the motion together for council to approve and then go from there.
This motion is to request that Masano Bradley revise their letter
Okay,
so we can have the revised letter presented to council for the next council meeting. And then at that point, hopefully we'll be taking action to accept the revised letter by the full council.
When it's appropriate, Bill, may I make a comment on the way the motion's worded? I would suggest that it be changed to say that finance administration recommend that council approve it, subject to those changes being made.
Sure, I will accept the revision to the motion.
So what revisions?
So the revision she
You're
asked,
asking for specific information, so we don't have a revision. We don't have that information.
right.
sure, so at this point, to recap the motion, so I'd like to make the motion to approve the letter, subject to the revisions set forth by Finance and Administration. And those revisions include the items mentioned before, including timeframe for bill date, identifying specific council members, adjusting paragraph 2 under section B to go under section A2, and there was a fourth item, I apologize.
To add malpractice. and
Add malpractice.
Heidi and Mike.
Describing the limits.
So these are additions.
Some are additions.
Some are additions and some are revisions.
revisions. Need to,
Well, an addition is a
Well,
revision of the
It's a
letter.
revision of the letter as a whole.
It would make the most sense if Janet drafted this, because if we just send this general concept over to,
no, it's going to be done by the staff as everything else is done,
well, whoever does
if
it.
we do.
If you
So-
do it, Phyllis. or-
Okay, we have a motion. Do we have a second?
Yeah, I'll second the revisions if necessary. Yes, I'll second that. Yes,
The revisions/additions.
right. Call it what you want.
Am I correct?
Revisions, if you want to word it in that way,
Because
revisions.
there are additions, it's not revisions.
Okay.
Additions, revisions.
And I am, and I'm going to oppose some of this for that reason, because some of this we don't need. As I said, we need to have a degree of trust. And as I repeated, sometimes with other things, we tend to back ourselves into a corner with no way out. And I can see we're doing it here. So we have a motion and second. All those in favor?
Aye.
Opposed? I oppose. Motion passes. I'll get you the contact information and let's see if we can have this information by Tuesday night. And let's make sure this is on the agenda again. Okay. Do we have anything on executive session? Or, no, I don't know of anything. Okay, we are adjourned. Thank you, one and all.